Good morning, traders. Welcome to the live stream. My name is Charles. I run a community called Piratetraders where we hang out every morning and we talk about the ES, the NQ, and how it moves through the two-way auction process. Thank you so much for joining me here on the Bookmap channel, and a huge thank you to Bookmap, the company. Important to note, all of the opinions that I share here today are my own personal opinions and not those of Bookmap. So let's get right into it. Today to me is a very important day for the market. And the reason today is a very important day for the market is because Friday was a very important day for the market. The market had a move that could only be described as a potential change in momentum yesterday. The market had been stuck inside of a range that it was bouncing around all week long, up and down inside what we call a balance area. A balance area is basically just an area where the market can't break out of. It's balancing inside of it over a multiple day time frame. Well, we broke out on Friday. Okay? And so that's a really good sign. That's a bullish sign that the market has spent enough time going sideways in here. It doesn't need to spend more time in here. It's ready to make its next move. And in this case, because it broke to the upside, that increases the odds that it wants to make that move up. Okay, great. So Charles, you're bullish. Does that mean I just buy right now? I should just buy, right? Right? Not quite, because there are two steps to breaking out of a balance area. Step one is doing the breakout, which we did on Friday, but step two is back testing that breakout, making sure that we really do have new buyers to keep the momentum going. So I'm going to zoom out here real quick on the day time frame and just show you there's two different levels that are interesting to me. The first is that balance area. So that's the box. The two horizontal lines that you see here, that is the balance area. So in the overnight, we came down and we back tested that balance area low. So if the market were to open from here, it would want to come down one more time because it doesn't count as a back test if it happens in the overnight. So we want the market to come one more time down and test that balance low. If it can do the same thing that it did, that previous balance area high. If it can do the same thing that it did in the overnight, if it can come down here and just bounce off of that level, well, then it's very, very bullish to keep going. But if not, it may need to back test the balance from this downtrend line. So let me just zoom out a hair here. So if you can see, this downtrend line that was created up here in the highs of July and August, okay? That was back tested, attempted to break, could not break, back tested again, and it took the market lower. So we are now breaking out once again. We're doing this same thing that we did before. Now, what happened when we broke out the last time? Well, we came back to back test it, and there was not support there. And because there was not support, the market headed lower. Okay? This is exactly the same scenario here as we had here. You had balance horizontally this way, and you had the breakout of the trend line. So it made that break, and what did it do? Came back to back test it. Okay, so that's what I'm looking for here this morning, is for the market to try to come back and back test either this previous balance area high or test the trend line. Okay, so how will that look if I zoom in and I look at it on the market profile chart? Well, the test of the previous balance area high would be a test of the overnight low around 44.08. So that would be the market pushing down to the overnight low, dipping below it, but then turning around and coming back up into the overnight range, right? If the market dips below the overnight low, comes back up, and that does not become resistance, it's able to pull back up in the overnight range, that is bullish. That buyers stepped in at that previous balance area high, and the market is looking to head up and test Friday's high, okay? So that is a look below and fail of a look below and fail of the overnight low. If it looks below and go, so if it goes below that overnight low, finds resistance, and it keeps going, well, then it's trying to backtest that larger trend line. And if that's the case, I would assume it needs to backfill these single prints right here. So the first target for the market is to come down and backfill the first set of single prints at 4,400, and then come down and backfill the second set of single prints at 43.93. So if either of those things happens, and then the market finds support and it turns around and heads higher, that is bullish to me. Like on a day time frame, that is bullish as a back test of that trend. Okay. If it pushes down here and it backfills these and it doesn't turn around and it keeps going lower, so we get new selling below 43.93, well, then I assume the same thing happened today that happened on this day. Okay, I will assume that was a breakout that has failed, and we are heading to the balance area low, which is 43.70. So it's actually really simple today because there is so much opportunity on the day time frame. It is pretty much like either the market is going to find support in here and it's going to keep going, in which case to the moon, baby, more short covering, more FOMO buying, or it's going to fail and it's going to head back down to Friday's low. And then we probably just go sideways the rest of the day down there. So let's see what happens. That's my prediction for the day. Now, what if the market opens and it just instantly pushes to the overnight high and instantly finds support and keeps going and it doesn't pull back at all? Well, that's bullish, and we'll just go with the momentum. But I won't really be able to trust it for a larger move to the upside unless we... Sorry, guys. I won't really trust it for momentum to the upside unless we come back and test that breakout. Also wanted to take this opportunity to let everybody know the workshops are back, baby, due to popular demand. Y'all have been begging me to get these workshops up and running once again, and so I am. On December 4th, I'll be launching the next workshop. If you don't know what the workshop is, it's a 2-week webinar series where I do 4-hour-long webinars every day from 11 a.m. to 3 p.m. We talk about a particular subject matter each day. We dive in depth to learn about a particular subject matter, and then we spend the rest of the day watching the live market and explaining how to interact with the live market. Okay. Just to go over some of the topics that we talk about in the workshop. We've got the day one is the tools. So that's where I teach you all the things I use. Market profile, bookmap, internals. What are all the things? What are all the terminologies? What's everything you need to know moving forward? Day two is about the path to profitability. That's where I teach the way a trader should act each day in order to get better and better, in order to become profitable. Becoming profitable in trading is not about learning a setup. It's not about learning a single thing. It's about learning how to be a trader, the process of entering trades, monitoring trades, and then developing trades over time. Day four, we talk about the two-way auction process. That's how I interact with the market every day. It's how I make sense of the randomness and find opportunities to take trades. Day five, bots, weakness, trends, and rotation. Again, getting much more granular in detail of understanding how to recognize momentum shifts in the two-way auction process. Then day six is developing edge and trading setups. So I teach you how to improve upon your system for trading the market and gradually, 1% a day, get a little bit better and slowly develop a skill. And then also how to actually figure out a trade setup. How do you enter a trade? Where do you put your entry, your stop, your take profit? Okay. Day seven, technical versus emotional problems, helping you to learn how to differentiate between is the thing that's holding you back right now because of something you don't understand about the market, or is it because of something that's going on with you psychologically? Day 8 is habits and routine. Day 9 is mindset. And day 10, we go over the entire course again to make sure that it's all deeply sunk in and you've learned it. So it's 10 days, 4 hours a day. All the lessons are recorded. So if you can't watch them live, you can always go back and watch them later. You can watch them for up to 2 years after the course is over. You can go back and rewatch as many times as you'd like. There is a discount this week only. Use promo code EARLY and you'll get that discount. So if you're interested in signing up, I will post a link in the comments right now. Oh, I can't because I'm not the host here. Okay, so you guys will have to copy and paste it. You can't click on it, but there it is. Marketsandmind.com. We'd love to see you there in December. 20% off. Discount code EARLY. All right, commercial over. Back to the live markets. Any questions for me? We're looking for a back test of the breakout. We're looking to see if we can keep the momentum going on the daily. Any questions at all? Good morning to Laura. Welcome to you. Bust a Move is here. David V in the house. Kevin, welcome. He says, thank God it's Monday and the casino is open. Jay's going to be upset you beat him to that. But good morning, Kevin. Jack in the house, welcome. Gino. Jay also says, thank God it's Monday and the casino is open. Yes, we are all degenerate gamblers here and so excited to start firing off those chemicals in our brain. For those of you who trade market profile already, you might be asking yourself, what effect does the spike play into this? We had a spike up on Friday. So we have a specific set of rules that we use when we have a spike that we call spike rules. Spike rules basically tell us that if we open inside the spike, that is a bullish signal that the market wants to continue higher. If we open above the spike with a gap up, that is the most bullish signal that the market wants to continue higher. And if we open below the spike, that is the least bullish signal. Now, it's important to note, I say least bullish, not bearish. Okay? Because the spike is bullish, plain and simple, no matter how you look at it. It is the market telling you it still has momentum and it wants to continue higher. So opening up the next day below, which it looks like we will here today, is not a sign you don't have the momentum. It is just a sign it is the smallest amount, the least momentum you could have. But it is still bullish to see. So I am not bearish because of that at all. If anything, it increases the odds in my mind that once we test that overnight low, we will just look below, find buyers, and then continue higher. Spike rules are in play. We got 89 people watching, 19 likes. Smash that thumbs up and hit me with a question in the chat. We got 15 minutes till market open and I have run out of things to talk about. Help me out here, chat. I guess I could do NQ. We haven't done that. All right, looking at the NASDAQ, it is very, very bullish. Same thing. Breakout of horizontal momentum, balance. Needs a back test. So that would be exactly the same as the ES. So if they get to the overnight low, you've got this large node of cumulative volume right here around 15,500. That should act as support for a look below and fail of the overnight low. If you get that look below and fail, that is bullish, baby, for continuation to the upside. If the overnight low becomes resistance and the market can't get back up in there, then you look to backfill the 2 sets of single prints, 3 sets of single prints. So the first set is at 15,490, then 15,460, then 15,400. Okay? So if they look below the overnight low and then turn it into resistance, you look to test that first set of singles. Maybe that's all the market needs to turn around and head higher. If not, you look to fill that second set of singles. Maybe that's all the market needs. If not, you look to fill that third set of singles. Maybe that's all the market needs. But if you cannot find support at 15,400 at that last set of single prints, well, then the market needs to pull back down towards yesterday's low as a failed break. Yes, sir. Actually, all the way down to 15,240. So exactly the same as the ES. I am bullish. I'm assuming the higher probability is continuation higher. I'm assuming we will see that by the market testing the overnight low and then pulling back up. That will be the signal. And then if not, backfilling single prints. Only if all the single prints fail, testing the balance area low. I mean, sometimes the market makes it easy. It's easy to see what's going to happen. It'll probably be grindy and difficult to read in the moment, but the levels are there. If it's going to keep going higher, it's either going to look below and fail here or it's going to bounce off of one of these 3. Do with that what you will. Q traders. RK says, us semi-pros don't see it that way. It's Monday and business is open. Turn on the lights, make the coffee, and have a successful day. That's true. RK getting all serious with us first thing on a Monday morning. Thanks, RK. No, that's true. You should treat it as a job, not gambling. Fair enough. Ken says, logged in just in time to hear that spike rules are in play. Can you go over the spike rules again? Ken, you can just scan back. You can scan back and watch again. But the long and the short of it is, spike rules today tell us that the market is bullish, but it is the least bullish scenario because we are opening below the spike. So it's the market saying, we have momentum, but we got to prove it this morning. Don't get overly excited. Bust a Move says, Friday's selling tail looks good, but a lot of pink. How does that play into tails? Yeah, so that's a sign of business happening up there. In the last half an hour, that's bullish to see, right? So whoever those participants were who did business right up here at the very high of the day, in pretty much the last 10 minutes of the day, by the way, why didn't they do business anywhere else? Buyers or sellers? Why not do business down here? Why not do business here or here? Why were they doing all their business up at the high of the day in the last 10 minutes? Because they were forced to, right? Those were traders that, or systematic trading that needed to, balance off at the end of the day on Friday. And so they had no choice. And it is bullish that they were at the high of the day, and they held it because it means it was more buying up there. Probably more short covering. But it's all just signs of momentum. We have momentum. So great. All we have to worry about this morning when the market opens is, do we still have momentum? That's it. First signal, we still have it. A look below and fail of the overnight low. Second signal, support at 4,400 or 4,493. The signal we don't have the momentum and we need to pull back down to the balance area low, those single prints failing. Money Pharaoh Hunter Money says, when I put footprint charts on the USA markets, it's too fast for me. Wonder how it used to be when it wasn't fast? Well, you and me both. But it's always been fast as long as I've been doing it, so I'm used to it. It is what it is, and it's never going to change. We can lament the good old days as much as we want, but the market is just going to get faster, more volatile, more difficult to read on a shorter time frame, as more and more bots are trading. Man, those bots can think quick. Six minutes to market open. Any questions for the pirate? We got 33 thumbs up. We got 115 people hanging out. If you're feeling generous this morning, give me the thumbs up. I promise it'll be good luck. It'll help you with your trading. Karma, baby. Karma. Give me them likes. Give yourself some good karma. Shawshank says, under what circumstances do we turn our bias bearish? All right, well, we got 5 minutes. Let me just go over it one more time. Sorry to everybody that already heard the spiel. But let's zoom out and take a look at the market on the day time frame. Okay? So this is what I believe is happening. I believe the market is breaking out of balance, okay, trying to begin new momentum to the upside to continue higher. So there's two different balance areas I'm looking at. One is the larger balance created by this trend line on the day time frame, and the other is the smaller balance area that we created last week. So either one of those, breaking out of them, could lead to a lot of excess to the upside. However, first we got to back test and make sure the market really has successfully broken out. So a back test of the smaller balance is testing the overnight low and failing, meaning we dip below the overnight low, but then we pull back up into the overnight range. If that happens, that's bullish to move to about 44.60, okay, as a breakout of this smaller balance area. If that doesn't hold, though, I'm not bearish. Normally, I'd be bearish. You guys know that. Normally, if we look above and fail a balance area, I'm instantly bearish to go to the opposite end. However, today I'm not, because we might just need to backtest the trend line, okay? So when I zoom in and I look at the levels on the market profile chart, these two, the base of the G period single prints and the base of the F period single prints, 4,400 to 4,393 is likely to be the support if we don't get a look below and fail of the overnight low. So if we dip below 4,409, come back up, find resistance, then we are going to have to head lower to test the base of these single prints. But if we find support there, bullish as can be. So I only get bearish if we break 43.93 and get new selling down here. That tells me we're heading to the balance area low, which is at Friday's low on the ES, 43.67, and at the overnight lows, or in the middle of the overnight range from Thursday night on the NQ, 15.240. Okay. So on the NQ, if the single prints at 15,390 fail, you're heading to 15,240. And on the ES, if the singles at 43.93 fail, you're heading to 43.67. Okay. But until that happens, you should be bullish. The breakout tells you should be bullish. The spike up tells you should be bullish. Everything is saying be bullish this morning. Be aware of the fact that we need to go down first, obviously, right? Don't just buy the market willy-nilly. Wait for support to be confirmed. But as soon as you see that confirmation, as soon as you see that support, those are buyers, and they're buying that breakout. Okay? They see this market as trying to go higher, and they want to get in as soon as they can. The first chance they get, the very first dip they buy, that is bullish. So that's what we're watching for. And so you say, well, Charles, let's say the market can't hold support today and it does head down to the balance area low. Wouldn't you have rather shorted the balance area high to target the balance area low? Wouldn't that have been a better trade? To which I say no. Any other day, that would be the better trade. But because we have that trend line to act as support right in the middle, not today. Today, I got to see those single prints fail first. And the market is open. So initially, we're looking for chop inside the overnight range. Resistance at 42.21. Support at 44.10. And we'll just let the market grind between those two. Whichever way it breaks will give us insights moving forward. All right, so we got a weak low and a low volume high. That tells us we're likely to spend some time chopping, going sideways here. There's going to be some indecision this morning for the first half an hour. Bust a Move says, on Bookmap chart, the black boxes with numbers are those icebergs, current buy orders. So the black boxes are just showing the amount of liquidity sitting at that level at that particular moment. So at this particular moment, there was 390 contracts there. At that particular moment, 290. at that particular moment, 300, so on and so forth. The icebergs are the numbers with the little, the two little triangle symbols next to it. Pharaoh says, after you buy it, you are now a seller, and after you sell it, you are now a buyer. My edge. Yeah, no, that's what I do. The two-way auction process, recognizing that once everyone that's gotten long is long, there's only two things that can happen. Either those longs start taking profits or new sellers enter the market, and vice versa. Good morning, Nap. Welcome. Okay, pushing into some support here. 44.11, looking for a bounce. Then for the market to test the halfback at 44.16 for resistance. If we get a bounce and resistance, the next target is the overnight low. No resistance, the high. Okay, the way we are technically getting support, but the way they're doing it, they're setting up to take out the overnight low first. So we are looking to test 44.08, and that is a very important level. There will be some stops down there, so we'll get a little bit of a liquidation. Once we liquidate, what comes next tells the tale for the rest of the day. Sellers at the overnight low is bearish for continuation lower. No sellers. So a liquidation that pulls back up into the overnight range would be bullish. Right now, my instincts are telling me look below that will fail. Let's see what happens. So keep track of this level right now. We're grinding right on 44.10, okay? So the market is turning this into support right now at this moment. That will be an important level for that look below and fail. When they look below and come back up, do they turn this support into resistance? That's what we will be watching for. So it's important to know where that support was right now so we know where to look for resistance when we come back. Okay, the market just created what we call a weak low because it stopped a half a point away from the overnight low. So once again, weak high, weak low, increasing the odds of more sideways to come. Michael says, good morning, Charles. What was your workshop again? Head to marketsandmind.com. You'll find it there. So that is the complete course. Every single thing that I have to teach, all the tools that I use for day trading every single day will be shared there. So it's designed both if you are an experienced trader looking to add to your edge, or if you're a new trader trying to figure out how the heck do you become a trader. All of that is taught in this course. Marketsandmind.com. Next workshop starts December 4th. This week only, discount code early. Get after it. RK says Friday's Moody downgrade weighing on the market. I did jump in and look at the last time we got downgraded, and the stock market shot up through the roof as a result. So caution there. Turns out less trust for the Treasury is actually good for the stock market for some reason, according to history. Probably just because the stock market is valued in US dollars. Okay, so Bookmap is showing us something very, very important right now. It's showing us that the low, which we know is a weak low, is being created by an iceberg. We see this green line right here with this little number 1. So far this iceberg only got to fill one contract. So I'm guessing when we come back down again, it's going to fill even more and even more and even more. And we're going to kind of grind right on this low for a little bit. The reason the market is doing that is to convince you to go long. It bounces and then you go long. It bounces and then you go long. It bounces and then you go long. But the reason they want you to do that is so you put your stops just below the low, giving them a little more momentum when they break. So I do believe, even though it looks like the market wants to bounce here, they're going to come back for this overnight low. And we're going to get a little bit of a liquidation there when all these stops get taken out. So patience this morning, okay? Let them do their thing. Let them grind and grind and grind. Okay, so there you go. It bounces again. People start buying right now. Oh my God, I got to get long. I got to get long. Where are they putting their stops? Right below the low. So here we go, round 3, probably another bounce at the exact same level again. There you go. So now once again, oh my God, I got to buy. I got to go long. It's a triple bottom. Where are they putting their stops? They think they're so smart. They're like, I'm buying the overnight low. The market is bullish. It's a previous balance area high. We're finding support. Oh my God, I'm a genius. I'm getting long. But they're really just fixing to get themselves squeezed. Round 4. Ding, ding, ding. We can do this all day, guys. As long as they keep buying, we can do this all day. Keeping an eye on this iceberg right here. Keith says, first they need to squeeze the shorts to test the VWAP, crush both sides. Yes, sir. They convince you to go long. They squeeze you. Then they convince you to go short, and they squeeze you again. I do declare, this market is cruel. Beast Mode says you don't use candlesticks. I do, but just on the day, week, and month time frame. I don't use candlesticks intraday because I just find the market profile chart, which is the exact same information as the candlestick, right? It just gives you more. It's just more information. So, for example, if I were to pull up a candlestick right now on a 30-minute chart, okay, all that this is showing me is where it opened, which is the top of the body of the candle, where the high was, where it currently is, and where the low was. Okay, great. I mean, that's important information to have. And then how much volume traded over this entire 30 minutes. Okay, well, that's not nothing. That's information. But that's very limited information. I mean, that's all it's showing me. The open, the close, the high, the low, and then how much volume traded in that time period. If I look at the same 30 minutes in market profile, I can see exactly where we brought in the most volume, literally to a tick, the exact level where the most business was had. It's just a very different perspective. As the day continues, I can start to see areas where we spent the most time. And that's just more detailed look at the same information. It's like a 3-dimensional look at what candlesticks show you as 2 dimensions. All right, so we're getting the bounce. I'm looking for resistance at the halfback. As I've said, I believe this is purely a game. They are just getting as many people to go long as they can here to create those stops when they come back down through it. So I am now looking for resistance at 44.14 to do exactly that. Come back and take out all those stops. Nor says Q. Let's take a quick look. Okay, so NQ is below the overnight low. That is bearish to see. You backfilled the first set of single prints. So now this is like a pivotal moment. The market needs to push back up into the overnight range here in order to keep the momentum going higher. If that overnight low, which is also the halfback at 15.512, becomes resistance, like you can't get back up into that overnight range, well, then you're heading down for the next set of single prints at 15.450. So this is the moment for the buyers to get back up inside that overnight range on the Q. Beast mode is market profile and indicator on TradingView. No, it is not. Not any good ones as far as I'm aware. I'm sure they're working on it though. All right, so we're coming back for this iceberg. My guess is it's going to disappear this time, and we're going to crash through. But they could do it again. They could keep the market there, reverse it at exactly the same level once again, trying to get more people long. So let's see what happens. It's very exciting, isn't it? Come on, market, do something. All right, here we go. Testing this iceberg. Do they fill again and bounce, or does it disappear? And it's gone. Okay. So here's the test of the overnight low. We are expecting a little bit of a liquidation here as we take out all those stops that we just built up. And now we want to keep a very close eye on what was support. Okay, this area right here, this big node where you see the red and the pink, that was the support trying to hold the market up. So now our question becomes, does that become resistance? Does previous support become resistance? If this becomes resistance, it is bearish to head down and test the base of the single prints at 43.99. However, if not, if we're able to push right back through it, well, that's a look below and fail of the overnight low, which is bullish for continuation higher. So, moment of truth. Can the sellers hold it? right, moment of truth for the sellers. They got to smack it down right now or it becomes a look below and fail. All right, so we got the look below and fail of the overnight low. That is bullish to see. Next thing I'm looking for, ticks get back above that zero line. Man, they're going to dance right on this overnight low. All right, I'm going to hang out for a few more minutes. Normally the live stream would be over now, but I'm going to hang out for a few more minutes and see how this plays out. Because this is going to dictate the rest of the day right here. Resistance once again. Man. 50-50 could break higher or lower here. What's it going to be? Come on, market. Make a decision. Okay, tick smacked once again. That is bearish to see. I am now bearish to head down and test the support at 43.99. The base of the G period single prints up. The idea was very simple. We had momentum for a breakout of balance last week. We are now back testing that balance area high, but we are not bringing in the buyers. If we did, those ticks would get back up above the zero, but they can't. So that means we don't have the buyers up here at 44.09. We probably need to pull the market back and look for them at a lower level. So I am only bearish to test that next level, 4,400. I don't know beyond that. We may bounce right there and then turn around and head back up. But it seems to me now we don't have the buyers here at the overnight low, so we're going to need a bit of a pullback. If I sign off here and then the market is able to turn this into support, turn around and head back up through the opening price, well, then forget what I just said. It's extremely bullish as a look below and fail. But as long as these ticks remain below the zero line, they probably need to test 4,400 first before they'll really be able to do that. So I'm bearish for that test. Let's see what happens. Bearish short-term intraday, bullish bigger picture. As I said earlier this morning, if they do turn either 4,400 or 43.93, if they turn either of these levels into support, that is bullish to me that the market will continue higher on a day time frame, meaning for the next few days, next few weeks, the market will continue higher. If intraday today, they can hold these levels. So very important to watch. Happy trading. Have a great week, everyone. I will not be doing this stream next week because I'm taking next week off, but I will be back the following Monday. So if you're purely a Bookmap person, I won't see you for a couple of weeks. I wish you a happy Thanksgiving. And if you're a Brigade person, head on over to the private stream. Let's hang out. Thank you very much, everyone, and have a great rest of your day. Oh, Sean's got a question here. If you get a minute, mind if you see stops and icebergs on chart settings? Yeah. So here are my settings for the icebergs. And here are my settings for the stops. There you go. Paul says, can you explain what the tick chart is? Sorry, Paul. Got to run, man. Got to run. But the good news is, December 4th, I'm teaching a workshop where I will go over that in depth and explain it to you with all the nuances that you could possibly need to know. For more information, head to marketsandmind.com. Marketsandmind.com, where traders learn to trade profitably. All right, I'm going to leave now. Goodbye.